Hello class, welcome to the video. This is the third video for your chapter 7 in your FI1. So in this video, we are going to learn a concept. This concept is called net realizable value in your closing inventory. Net realizable value, the short form is NRV, is the estimated selling price less the cost of completion and the estimated cost of selling to make the sales. According to the accounting standard IAS 2 inventory shall be valued at the lower of cost or NRV. When the cost of inventory is higher than its NRV, the assessed value shall be written off, or we call written down. NRV concept in inventory is the application of Rudin concept. So in the wording may be quite difficult to explain, so we use a diagram to present this. So according to IAS 2, this is the accounting standard, International Accounting Standard 2. Inventories. It gives guidance on the valuation. So when you do the valuation of your inventory, you should choose the lower of two items. You should choose the lower of cost or net realizable value. So what is the net realizable value? The formula of net realizable value is we use the estimated selling price minus the cost of completion and minus the cost of selling. The meaning of lower of means if the cost is lower, then we use the cost. If NRV is lower than the cost, then we choose NRV. Because this application is follow the prudence concept, we always value our inventory at the lower value. So we will do a comparison on either your inventory cost is higher than the NRV or not. So if today, if the cost of the inventory is higher than the NRV, then we will have a written off, or we call written down. So we use one exercise to practice this concept, the NRV concept. So let's take a look. Classroom exercise 7.10. So the following is the inventory of LKY company as at 31st December 2017. So here we know this is the product name and this is the quantity of the product, and this is the cost of purchase, this is the estimated selling price, and this is the additional information. So what's the requirement? They want us to calculate the total closing inventory value as at 31st December 2017 for LKY company. So let's look at product AA first. LKY company will give a sales discount of 30 cents each to the customer to encourage their customer to purchase AA. So we have to prepare a table. Let's prepare a table for this. So this is classroom exercise 7.10. So we start from the product AA. So this is the quantity, this is the cost, and this is the NRV, and finally what is the total value. So for AA, the quantity we have, product AA, the quantity we have is 30, the cost is $4.50 each. What is the NRV? We say that NRV is the estimated selling price less the estimated cost of completion and estimated cost of selling to make the sales. So this 30 cents is considered as what? Cost of selling. So when we determine our NRV, we should use the estimated selling price, which is $5.20 minus 30 cents. So we get the answer $4.90. So cost compared to NRV, which one is lower? Cost is lower. So in order to get the value of AA, we use 30. We use 30, which is the quantity, times the unit cost, $4.50. And the answer will be 30 times 4.5. So we get 135. The value is 135 for AA. Remember, NRV, we're using the estimated selling price minus the cost of selling. So from here, we choose the lowest one to get the total value. So next, let's look at the product BB. For BB, I have 25 units. The cost of the product is $3.60. Let's look at the NRV. Due to the aggressive competition in market, LKY has to sell BB below its cost. So we can say that the estimated selling price is only $3. So $3 here. Tell me, which one is lower? This is obvious that NRV is lower, right? So in order to get the total value of BB, we use 25 times 3, the lower value. So become 75. And next will be our CC. For CC, the quantity we have is 50. The cost of the product is $8.20. Let's look at the NRV. During the quality check on the product, LKY noticed that CC is damaged and require repair before it can be sold to the market. The cost of repair is $2 each. Again, for NRV, how we get the NRV? We use the estimated selling price less the estimated cost of completion. So this repair cost we can consider as the cost of cost of completion. So we use the estimated selling price, which is 10, minus the cost of repair, which is 2, to get the NRV, which is 8 per unit. After you get the NRV, we do a comparison, cost compared to NRV. Which one lower? Obviously, your NRV is lower, 8 compared to 8.2. So to get the CC value, we use 50 units times $8 per each. So we get 400. And the requirement is they want us to provide what is the total inventory value. So we use 135 plus 75 plus 400. Answer 610. So this is the total inventory value for LKY company as at year end. So that's all for the explanation of NRV. I will try 7.11 with you during our live section. So that's all for chapter 7 video. If you have any question, you can leave me a message in the YouTube, or you can send me by email or ask me in the LMS. That's all for chapter 7 video. Thanks for watching.